standard is SAE 3420. One of the easiest standard. Okay, you can think that this is the best easy standard in this chapter. Okay, very easy, no complications at all. Not a big standard also. How many pages, sir? 1, 2, 3, 4. Sir, you told easy, sir. It's going. Hey, here everything what you have studied now will repeat. Okay, this is a repetitive standard, right? Right, sir. What is SAE 3420 talking about? Assurance engagement to report on compilation of pro forma financial information included in the prospectus. Heard about prospectus? What does the prospectus do? What does the prospectus do? It's an offer document. It offers you to make some bidding for securities, shares, whatever it is. Clear? So prospectus is what we call as offer document. Now in the prospectus, whenever you are giving, what is pro forma meaning? A pro forma in Latin means what? For the sake of the form. Meaning what? Sir, formalities, sir. Heard about pro forma invoice? What is pro forma invoice? It is not a final invoice. It is just how it will pan out, how the invoice might look. Clear? It is not an actual sale that has happened. It is not an evidence. Pro forma invoice is not an evidence that sale has happened. Pro forma invoice is nothing but if sale would have happened, how the invoice would look. And that is what we call as pro forma invoice. Clear? So, what we are studying in the standard, assurance engagement to report on compilation of pro forma invoice included in a prospectus. So, pro forma financial information, if it is there in the prospectus, I should, sir, report on that as well, because it should not be misleading. Chumma, if you put PFFI is what we call, okay? We call this as what? PFFI, pro forma financial information. Clear? So, people should not get misled by such things. And for that purpose, we'll be, auditing this? No, we'll be examining this. Clear? We'll check this and we'll give a report on this saying how it will look, sir. Clear? If the effect was done. For example, imagine, let's say the company will go for redemption of or issue of preference shares. Redeemable preference shares they will issue. Now, in case of redeemable preference shares, there are certain effect that they have to give. Yes. Now, when imagine investors come or somebody comes, now you are proposing that we are actually going for redemption, issuing of preference shares, sir. Now he'll tell, okay, you're going for preference shares issue. Do one thing. Prepare a financial information in such a way, give effect and show me how it will look like. But that's not the final one. That is not final information. It is just a pro forma financial information. It is just like in case if issue of shares had happened, what all effects I would have given. Second example, company wants to go for reduction of capital. If company goes for reduction of capital, Creta's, certain adjustments will be there. Share capital might change, right? Extinguishing the liability, paying off excess capital. Now, investors might tell, or anyone who wants this information in the prospectus form, they can tell, do one thing. You give me an offer document, but in that offer document, you want my money, no? I'm an investor. You want my money. In that offer document, you include a financial information in such a way that after reduction of capital, how information will look. Prepare that. Put that in the prospectus, give that prospectus to me. But you have not done reduction yet. You are assuming here, if reduction had happened, how it will look. But that's not final. Sir, didn't understand. General example you give, no, sir. You go to, let's say, for example, to buy sherwani or, sari or kurta or whatever for special occasion. Okay, for your wedding and other things. Let's say your cousin's wedding is there, your wedding is there, whatever. When you go and purchase, do you directly go see that purchase, go bill it? Then?
Try it online.
You try it out, no? Online? Do you try it out? Or not? Do you try it out or not? Tell me quickly. Do you try it out or not? My question to you, when you're trying it out, do you really go to that particular trial room? do all your makeup, clear, then put the clothes on, go take a bath, properly get dressed up, and then you see yourself. Then
Only the dress we use.
you just put that dress on you. You just see, okay, whether the fitting is fine, okay, comfortable or not, etc. That is called pro forma trying. That trial, just fit check. Yes, yeah, Gen Z language. Fit check. Yeah, just going, standing in front of the camera, whether it is properly there or not. Yes or no. Now, that is called pro forma checking. Based on that only you take a decision. No. But that doesn't mean that you're actually wearing what you are supposed to wear in the function. If I was wearing, how I might look. But that is not the final version. Similarly here, investors want to put money in my organization, but they want, in case if this event was done, what would have happened? Number one. Number two, sir, why only investors, sir? I'm going to give you an international example. Okay. I'll show you the report of both. Sir, in India, we have SEBI. In US, we have SEC. Heard? Heard SEC? Securities Exchange Commission. Just like how we have Securities Exchange Board of India. They have Securities Exchange Commission. Right? We have SEBI, they have SEC. Now, in those countries, what they have done is SEC has told for large investors, clear, saying that, sir, you have to give us pro forma financial information. How certain events, if it would have been done, how it will look. Clear? The reduction of capital is classic example. They'll tell, okay, assume the reduction was done and show me the effect in your financial information. So basically now there are three elements that we have to talk about. Okay. Here language is a little different. Clear? Three elements we'll have to talk about. One is called unadjusted FI. What is it called? Unadjusted FI. Try to understand first. Online live, you also there. Try to understand. Don't copy now. I'll give you time to copy. All the time I'll give you in the world. But try to focus on the concept now. Easy standard. If you miss out on this, then the standard is gone. Clear? Standard is absolutely easy. Unadjusted FI is there. Then we have something called as, what is it? Pro forma adjustments. Now take pro forma from here, take financial information from here, and then what results we get is pro forma FI. Sir, in pro forma FI, what will be there, sir? Adjustments to unadjusted financial information. This unadjusted can be audited, need not be audited. So it could be audited or unaudited. Sir, what is this pro forma adjustments? All your entries, you give the effect to the bank, give effect to the asset. So basically, events and transactions adjustments. Clear? So this plus or minus this will be this. Plus minus division 1. You take the basic, the source is what? Unadjusted financial information. Source is what? Unadjusted financial information. So you take the normal balance sheet that I have already prepared, right? It could be audited one or unaudited, no problem, because we don't know when you are going to submit it. It could be during the year, it could be after the audit, we don't know. Clear? So it could be audited or unaudited. For this, you give your adjustments. For example, let's take an example, sir. Let's go for buyback. When you go for buyback, take the balance sheet or unadjusted financial information. Put adjustments. What adjustments will be there? Plus or minus? Sir, when I go for buyback, I'll buy my shares back. When I'm buying my shares back, my share capital should reduce. Yes. So reduction or rather shares will reduce. Then my bank will reduce. Why? Because when I'm buying back, I'm supposed to pay also, no? My bank will reduce. Then obviously debt equity ratio will change. Because company law has told debt equity ratio should not be more than 2. Yes. So all these effect you give and then you present it as PFFI. Sir, this PFFI is not a final one. We are giving it just to SEBI because they are asked for it. It's their requirement, that's why we are giving. This is not given to outside users. This is only for whom? SEBI or any regulator if they ask specifically. But not just that, we use it for multiple purposes as well. For example, to motivate employees, we can use this. Imagine we tell them, see, if you manufacture every day, if you manufacture so many units, our production will increase so much, our profit will increase so much. So this much extra profit we'll get. And out of the 10% when we are giving, it will be huge. Okay, you told. How do we know? Take balance sheet, put all the adjustments, present it to them. And show, see, this is before adjustments, this is after adjustment. See, previously it was 10 crore. Now, because of your small effort, it is going to 100 crore. 90 crore difference is there. Out of that, we can give it bonus to you now. But that PFFI is not final. It is our assumption that if this happens, what all effect can happen, and that is how it is shown. So, this is a draft. And it is only for certain purpose. Intended uses, therefore here. It is not similar to SAE 800. What is 800? 800 is what? What is SAE 800? Special purpose framework. This is not special purpose framework. Their special purpose framework, we are preparing and financial statements which can be audited and which can be given also. Here we are not preparing a framework as such. Here we are just giving certain adjustments of whatever the requirement is there. Here, SEBI is not telling prepare in this manner only. SEBI is saying whatever adjustments you are telling, no, do that adjustments and give. Now it could be general purpose also. Special purpose means what? They specifically tell, no, cash basis only I want. Accrual I don't want. Prepare on this basis only. Prepare on fair value basis only. They are saying, no, in this case, no framework like that. You follow special purpose framework, you follow general purpose. Whichever framework you are following, do respective adjustments and show it to me. What is the effect of that transaction? Understood? Clear? Rishabh, did you understand? Okay. Now, come here, read these points. Various standard setting organizations have issued guidelines for pro forma financial statements to follow. But we have to see what is applicable for us. Example, in US, SEC publishes guidelines for large public companies like where they have to prepare pro forma condensed balance sheet, pro forma condensed statement of income. Clear? So where can we use this, sir? Examine debt refinancing. So in your accounts, you have something called as internal reconstruction. In your inter, you had internal reconstruction. What happens in internal reconstruction? You reconstruct the entire balance sheet, no? Basically clean everything and all. All impurities, everything we remove so that it looks attractive to the investors. Yes, but now that they will tell, okay, debt refinancing you're doing, do one thing. Imagine I've given you money. Imagine I've given you money and tell me how it looks now. So you take that the event has never happened, but assume that if event had happened, how my balance sheet will look. So think that, prepare the balance sheet and then show it to me. Based on that, I will decide whether I have to give you money or not. Are you getting my point? Understood. Clear. So that is how SA 3420 pans out. Okay. So assess impactment of one-time purchase. Imagine you are purchasing a business. Now your investors might say, boss, if you want me to give approval, you first tell me at what rate you are purchasing the business. Assume you have purchased the business. Show me the effect on the financial statements. If I am satisfied with that, then I will go for approval. I will give you the approval. So for him now I have to assume that I have already purchased a business at this particular price then I should show them how it will look. And based on that, they will take a decision. Understood? Hey, why sir? Forget about it. Let me ask you guys. How many of you had watched the demo of the class before joining? Online live. Before joining, how many of you have watched the demo? You guys have watched the demo and then joined, no? Why did you watch the demo? Why did you watch the demo? Tell me, what is the basis for watching the demo and then deciding on it? Now, if you had come to me and if I had told you, don't worry, I'll teach you properly, I'll give you notes, I'll do this, I'll do that. If I told you, would you join? Versus, would I shown you, would you join? Which is more reliable for you? As a student, you want to take my class. Okay, you come and talk to me and I'll tell you, don't worry, see, I'll do like this, I'll take up standards like this. I'll have handwritten notes also, I'll give you. Some extra information also, I'll give you. This I'll give you, that I'll give you, I'll tell. That is more believable for you, or when I actually show you a video. Exactly my point is. Exactly my point is. To get a little idea about the way of teaching, exactly my point is, now that is for students, no? Video is for students, no? Now, aren't you actually watching like a student, even without being a student? When you're watching that video, are you not watching that video like a student, even without becoming my student? Online? Yes or no? How do you take class and are we able to understand? Exactly. Now that is a student's job, no? So when you did that, don't you think it is very similar to PFFI only? Pro forma class you took. You became a pro forma student, although you were not an actual student at that point of time. Same logic here we are using. Same logic here we are using. So here we are telling, in case if you have done reduction, in case if you have done buyback, in case if you have purchased a company, how it will affect your financial statements, how it will affect your financial information, take that effect, prepare it and then show it to me. Based on that, I will take the decisions. Clear? Assess mergers, acquisition and company strategy. Clear? Create sales and budget projections. You look at this. This is Amazon. Okay. Now Amazon, if you see here, it's little blurred, so adjust little. Okay, swalpa adjust madi. Little bit more you adjust. Okay. Now if you see, what is this? This is unaudited. But we call this as what? Unaudited financial information or unadjusted. This is unadjusted. But I told you, unadjusted can be unaudited or audited both. Okay, sir. Now, if you technically see here, for 3 months they have prepared it. Okay, September 30th, 2001, September 30th, 2000. Now, if you see as reported, sir, what does this as reported means? As reported is nothing but financial information which is unaudited. Unadjusted financial information which is unaudited as reported. Then pro forma adjustments will be there and then you'll get pro forma financial information. Clear? So, how you have to compare, sir? This one you have to compare with this. This one you have to compare with this. And then this one you have to compare with this. Are you getting my point? Understood? Right? Now, let's say for example, you have 1 lakh shares. Okay? In unadjusted financial information. You plan to buy back 10,000 shares. So, in the pro forma adjustments, what will you show? Minus 10,000. Then pro forma information, it will show how many shares? 90,000 shares. But did you go for buyback now? No. You are just assuming that if I had gone for buyback, how my information would look like. So shares has come down. On the other hand, bank will come down. Because for this you would have to pay, no? For 10,000 shares that you have purchased, you are supposed to pay. Right? Now your debt will be remaining same, but your equity is reduced. Correct or not? Yes or no? So I need to understand these effects. If you tell me, I will not understand. So many effects could be there. You prepare PPFI, give it to me, then we will talk about it. Is what this chapter is telling. This standard is telling. Understood? Ah? Clear? Ah? Yes, sir. Got the clear clarity on it. Operating expenses, fulfillment, marketing, technology, for everything you give. Clear? Amortization, right? Then interest income, interest expense, other income. So this is your statement of P&L. I mean income basically. Clear? Statement, pro forma statement of operations they have told. Understood? Clear? Yes. Any doubts? Any doubts? No? Okay, sir. Done. Now, so how it looks, sir? Unadjusted FI with pro forma adjustments. It will be called as pro forma financial information. Is that clear? Okay, sir. Next, sir. Applicability. We call it under the standard. It will be called as PFFI. What is PFFI? Pro forma financial information. Applicability. It is applicable as per the requirements, sir. It applies where such reporting is required by securities law or regulation of security exchange in the jurisdiction in which the prospectus is to be issued. Sir, whenever I say prospectus is for, answer this. Prospectus is for public offer or prospectus is for private placement? And for private placement, what do we give? Offer document as? For private placement, we give PP offer letter. Clear? We'll be giving what? PP offer letter. We don't give prospectus here. Prospectus is generally given for what? Public offer. Sir, whether you are doing private placement or public offer, because public company can do both. Private companies will not do public offer. Clear? But public companies can do both. So that's where SEBI will come into the picture in India. If it is US, SEC will come into the picture. That's why I showed you that SEC amount only, I mean your background only, how it is panned out. Similarly in India also, SEBI will be taking care of it. Understood? Clear? Where such reporting is required by whom? Security law or regulation in the jurisdiction which prospectus is issued. Right there. If it is in India, SEBI. If it is in India, SEBI. If it is in India, SEBI. If it is US, SEC. If it is US, SEC. Now, sir, what is PFFI, sir? Before that, let's talk about this. Now, I told you multiple purposes are there, right? Now, two of the purposes that I want you to know is these two examples. Unlimited is intending to go for issuing redeemable preference shares and they have to prepare an offer document, and as per SEBI, here we are talking about only SEBI, okay? They have to present FS as on the date of offer as if issue was made. So what is the purpose? Making the issue is the purpose. So as if the issue was made, you put it to check how the position would look. The financial position in the company, how it would look after you issue this particular security, I want to know. Similarly, you have issued bonds, debentures, interest you will have to pay. Correct? How it will look. Similarly, it could be for buyback also. Imagine, or even purchase of asset. Whenever you are purchasing the asset, fixed assets will be more, depreciation will be more, profit will be reduced. I want to know how it will affect the reserves and surplus and other things also. It will affect the equity, right? So all these things, net worth it will affect. So I want to know how it will look in case if you are purchasing the asset and you want money for that. Clear? So imagine company presented financial statements as if buyback was done. Buyback, sir, unadjusted financial statement, let's say quarter 1, April, May, June. First quarter, 30th June. Clear? We have unadjusted FI. Hey, unadjusted FI should be audited or unaudited? Anything. It could be audited also. It could be unaudited also. Then buyback related adjustments we'll be doing, and what we call that as pro forma adjustments, and then we'll be getting what? Balance sheet after the adjustments is what we call as PFFI, right? And refer notes for more explanation. We already seen Amazon example, how it is shown. Clear? Understood? Yes, sir. Okay, sir. Right. Next. What is PFFI, sir? Pro forma, something done as a formality for the sake of appearance, how it will look. That's it. Clear? So, financial information shown together with adjustment to illustrate the impact of an event or transaction on unadjusted financial information. Don't write unaudited, write only unadjusted, because unadjusted can be audited also, unaudited also. Clear? Yes, okay, sir. Now, as if the event had occurred, okay, or the transaction had been undertaken at an earlier date selected for the purpose of the illustration. So basically, what do you mean by illustration? What is illustration? Example, sir. If it has happened, how it will look. The PFFI is used in the offer document to demonstrate the effect of a transaction of a company as if those transactions had occurred at an earlier date. Right there. Actually, the transaction has not yet happened. Actually, the transactions has not yet happened. Not yet happened. But we consider the effect as if it has happened. We consider the effect as if it has happened. They may take the form of statement of P&L balance sheet to illustrate how the transaction might have affected the assets, liability, earnings of the issuer. Right? Example, I have already shown you Amazon. Clear? They also include notes in relation to the significant aspects of the transaction, assumptions used to prepare a PFFI, and the adjustments made. Obviously, we are assuming certain things, no? Imagine I'm trying to issue 1 lakh debentures. I don't know whether 1 lakh will be subscribed or not, but I'm assuming 1 lakh will be subscribed. It could be under subscription, it could be over subscription, right? But if it is under subscription, my financial statement will change. But I'm assuming that 1 lakh debentures will be taken by people. People will subscribe for entire 1 lakh. If it is subscribed, how it will look? It might be subscribed at 1 lakh or under 1 lakh or over 1 lakh. We do not know. Clear? PFFI does not represent the entity's actual financial position. It doesn't represent actual financial performance or actual cash flows. This is achieved by applying pro forma adjustments to the unadjusted financial information. Yeah, right? Okay. Adjustment to what? Unadjusted financial information. I'll highlight for your sake again. Pro forma adjustments to unadjusted financial information. Okay, sir. What is the objective? Objective is very simple. To obtain reasonable assurance about whether PFFI has been complied by the responsible party on the basis of applicable criteria. So criteria, I don't know. You tell me what is the criteria. Who decides the criteria? What is applicable criteria? Sir, used by the responsible party while compiling the financial information. It can be established by authorized or recognized standard setting organizations here. This is what I told you. Point number 1. Various standard setting organizations have issued guidelines on how to prepare pro forma FS. If they have mentioned, follow that. If they have not mentioned, what to do then? Nothing, sir. Where established criteria does not exist, they will be developed by the responsible party. And who is responsible party? Management. Management or client. Okay. So as per applicable criteria, the responsible party is management. Clear? Or, we call it client only. So client will prepare whatever is the applicable criteria. He will only prepare and he will give it to me. I need to check it. So my responsibility is not to prepare. My responsibility is to check the preparation. Okay, sir. To obtain reasonable assurance about whether the PFFI has complied as per the criteria. Now, in this we don't call AFRF. What is AFRF? Financial Reporting Framework. We don't call it. We call it applied criteria or applicable criteria. Here we don't say management or TCWG. Here we say what? Responsible party. Clear? Okay, sir.
Criteria would there.
Yes, it is there. Where?
SAE
SA 800 series. There would have seen. Applicable criteria. Very good. Compilation of PFFI, sir. Sir, compilation. Now, compilation 810 or 805.
810. No, 4410.
Very good. Compilation comes under 4410. Right? Don't fall for only that option. Think, what have I asked? Okay. 800 and 810 is about SA. Compilation, we never do audit. Therefore, SA will not come into the picture. Clear? It is SRS 4410, and that is where you saw applied criteria. Okay. So, compilation of PFFI. Compilation involves responsible party gathering, classifying, summarizing, and then presenting the information. So, whose responsibility it is? Responsible party's responsibility to gather, classify, summarize, and then present the financial information. That illustrates the impact of significant event or transaction. I'll write here significant event or transaction. It could be mergers, acquisition, or buyback, or issue of securities, etc. Redemption, reduction, whatever it is. Clear? Any event or transaction on unadjusted financial information as if the event had occurred. Sir, this is multiple times it will repeat. So this is a catchphrase for you in this standard. What is the catchphrase? Impact of significant event or transaction on unadjusted financial information as if the event had occurred or the transaction had undertaken. Clear? So this is a catchphrase. I am repeating this. This is a catchphrase for you. Very, very important in the standard. Okay. Steps involved. First you have to identify. Then you have to adjust. Then you will prepare. So this is what we did here. Identification. This is identification. This is adjustment. And then this is presenting. Clear? Work is it. Nature of practitioner's responsibility. What is my responsibility, sir? I have no responsibility to compile. Because it is whose responsibility? Management's responsibility or client's responsibility. I have zero responsibility of compiling. Clear? My responsibility is only what? To report on whether PFFI complied as per the criteria or not. Again, I told you, here we don't use the word AFRF. What do we use here? Criteria. Generally, what we say, whether financial statements are prepared as per AFRF. Here we say, there is a financial statement, whether PFFI has been prepared or compiled as per. Understood. So, take. I will give you that both comparison also. Generally we say, financial statements are prepared as per AFRF. But here what we say, sir, when you talk about 3420, what does it say? PFFI, they have compiled as per AAC. So financial statements are replaced with PFFI. Preparation is replaced with compilation. And AFRF is replaced with applicable criteria. Understood? Clear? Now did you get it? So there we say FS, here we say PFFI. Clear? There we say AFRF, here we say ACA. There we say preparation, here we say compilation. Understood? Clear? Okay, sir. The responsibility rests with the responsible party, who is nothing but management for us. Clear? Management or client. Okay. Then it is a reasonable assurance engagement to report on the compilation of PFFI involving performing procedures. We still have to perform procedures to evaluate whether applicable criteria provides a reasonable basis. Whether properly that criteria gives us basis for opinion. See, in this standard we have to give opinion. Clear? Respond here. We'll have to give what? Opinion. To give opinion, we require conclusion. Do you agree? For conclusion, don't you think we require evidence? Yes. And for evidence, we require to put procedures. So, we still have to put procedures. It is a reasonable assurance engagement to report on compilation. So, it's not a moderate level of engagement. What is engagement? It is reasonable assurance engagement to report on the compilation of PFFI involving performing the procedures to evaluate whether the criteria used by the management provides a reasonable basis for presenting the significant effects directly attributable to the event or transaction. Meaning that event or transaction, have you prepared properly or not? For that, I need to put procedures to get evidence about it. Got it? Got it? Online. Did you get it? Yes. Super. Now, just like how we follow steps in other audit, no? General audit, same steps you are following here. What are those steps, sir? Number one, engagement acceptance. Yes, in general audit, SA 210 we follow, no? For acceptance, yes. Then, planning and performing the engagement, strategy planning program. Then, WR we need to take, form the opinion, prepare the report. What are the stages? Number one, acceptance, performance, WR, forming the report, preparing the report. Forming the opinion, preparing the report. Clear? Easy standard, sir. So, engagement acceptance is a stage number one. Everything repeat. It might look lengthy. It is repeating only. Planning and performing, WR, opinion, prepare the report. Done, sir. Documentation. Clear? Right? These are the 5 steps. First one, let's talk about engagement acceptance. So, if I have to accept this engagement, what are the things that I need to think about? Number one, before agreeing to accept an engagement, the practitioner shall consider the matters stated below. Number one, whether, hey, here we are not called as what auditor? Who are we called as? Practitioner. Clear? Practitioner has the capability and competence to perform the engagement. This is your capability. You have to judge your competence. If you don't know how to perform, why are you even accepting it? Don't accept it. Number two, based on preliminary knowledge of engagement and discussion with the management or responsible party, applicable criteria are suitable and PFFI will not be misleading. So get to know, assess whether two things, AC are suitable and PFFI will not be misleading. PFFI will not be misleading. Clear? Because obviously it should not mislead for that purpose. You have some purpose to achieve. So that purpose has been achieved or not. Number three, evaluate the wording of opinion, okay, prescribed by relevant law or regulation to determine that practitioner will be likely to able to express the opinion as prescribed based on the procedures. So if law or regulation prescribed the wordings or will I be, not can I, will I be able to express it? So I cannot use my own language. Will I be able to express in that language according to my procedures? I have to evaluate. Otherwise, don't accept. If you are not, because law and regulation specifically has told you how to do it. And if you are not able, no sir, my way or highway. Clear? Law regulation will tell, go away. Not required. Because you have to comply with my rules and regulations and not with your rules and regulations. So if you're able to do it, accept it. Otherwise, don't accept it. If the sources from which unadjusted financial information and any acquiry or divestee financial information have been extracted. Sir, acquiry means what? In case of acquisition, concept. Sir, if you're acquiring a company, acquirer is you. Acquiree is the opposite person. Basically, the selling company is what we call as acquiree company. I am the acquirer. I am purchasing the company. Correct? Divestee means what? What is divestment? Divestment means leaving your investment. You are withdrawing your money. Clear? The company from where you are withdrawing. We have to understand the language there. Clear? So any acquiree or divestee. Sir, what do you mean by that? I'll give you 1 minute. As usual, whatever our task is there. Every now and then, whenever there is some opportunity, I told you I'll give you that particular task. 1 minute I'll give you. I want you to read point number D and tell me what it means. How much ever is possible from you. Online live, you put in the chat box.
So this is talking about even before any kind of adjustments are.
Okay.
So they want us to know whether the company, the target company or the divesting company's financial statements have been audited, whether they have been reviewed, or what kind of opinion was expressed.
Okay.
And whether there was something very important stuff which was included in EOM pack.
Okay. All right.
Related to financial statements.
Okay. Others. I got one answer. In short also you can tell me no issues. In short also you tell me no issues.
Do they want us to tell in EOM para that this company is almost about to get acquired or?
Okay, you are telling that way. Okay, fine, got it. If unadjusted FI is audited, can a practitioner give reference to that report in PFFI? Okay. Now, whose report you're talking about, Shama? I want to know that. See, for example, first you have to understand. Now, acquiry and divestee means what? Acquiry is the one who's selling the company. Divestee is the one means what? Who is actually, sir, where investment is being divested. So, what am I supposed to do there? If sources from which the unadjusted financial information and any acquiry or divestee financial information has been extracted, if it is audited or reviewed and modified opinion was given and report contains UIM para, consider whether law or regulation allows the use of reference in practitioner's report, the modified opinion, etc. Right? Shama, you are right, but you are not given the exact reference there. Acquiry FI can be used if permitted by law. Okay. See what it means is very simple. Now, just give a reading. If PFFI is based on unadjusted financial information and such a financial information is audited, this is a situation. Now, the auditor had given a modified report there in that particular financial information or financial statements. Whether practitioner can use or refer to such modified opinion in my report. Now, imagine I am the practitioner. Okay. Now ArivuPro, I am the practitioner, right? For ArivuPro, I am checking PFFI. Now, if ArivuPro's PFFI source is unadjusted FI, okay, and unadjusted FI is audited. I told you unadjusted can be audited or unaudited. And in that audited financial statements, the previous auditor had given some modifications or EOM or whatever it is. Can I refer to that in my report? Because I am not the same auditor. I am a practitioner. ArivuPro had appointed someone else. Now imagine Rishabh. Rishabh had audited their financial statements, ArivuPro's financial year 23-24. Okay. That is unadjusted FI for us. Unadjusted but audited FI. Correct? Huh? Now, ArivuPro had taken that unadjusted or audited FI, then put some adjustments there, then they presented PFFI to me. Okay? Let me put it in this manner now. CA Rishabh had audited financial statements of ArivuPro Limited for FY 23-24. Okay. Now, what has ArivuPro done? ArivuPro has prepared PFFI as on 30th 6/24, or rather we'll take 25. Okay, 30th 6/25. Now, for this PFFI, that means they have taken unadjusted FI, right? Then they have made what adjustment? Pro forma adjustments. Focus first. Don't write anything. Focus first. Unadjusted FI, and they have done pro forma adjustments, and that is when they got PFFI. That is when they got pro forma financial information. Correct? Now, this is audited, no?
Yes, sir.
By whom? CA Rishabh. Right? Now, what they are telling is, sir, if sources from which unadjusted FI and any acquiry or diversity financial information have been acquired. So, we'll be talking only here now first. Okay? You forget about this still now. And any acquiry, diversity financial information has been extracted, you leave that. Right? Now, if it is audited and reviewed, so this fellow in his report, he had given modifications. He had given modifications, he had given EOM, right? So if he had given any such, now PFFI is audited by me, CA Karthik. I mean, reviewed by me. Okay. The point is, I have to prepare a report now. And who am I called as? Practitioner. Can I refer in my report this? Can I refer this particular modifications or EOM which is mentioned in the report of CA Rishabh? Understood now? Got the clarity now? Online.
Can you just write that?
Yeah, I'll give it. I'll give the time. Don't worry. Did you understand this logic? Yes. Now, don't worry. I'll give you time. Okay. Keeping this in mind, I want you to read this point again. Just point number D. If sources from which unadjusted FY had been extracted. Now. See here. Point number 1. Sources from where unadjusted FI was extracted. From where did you extract? Diversity company, acquiry company, where? Clear? So that person's, if you had any modification, it will affect my PFFI. So check whether those adjustments have been properly done, whether that modification I have to refer or not. This unadjusted FI, there could be source.
We can refer only the audited report.
Only when audit is done, opinion will be given. No. If audit was not done only, what reference I will give? I can't give any reference. Clear? Now read this point. If the source from which the unadjusted FY have been extracted, have been audited or reviewed, and a modified opinion, review conclusion or report contains EOM para, consider whether law allows you to refer to that in your report. Sir, can I refer? Now, see here. Now, see here. This particular thing depends on law or regulation. Clear? If law or regulation allows, disallows. If law or regulation allows, refer. If it disallowed, do not refer. Got it? Yes, easy. Easy to understand now. Okay, sir. That's it. Simple. Then, if the, you wanted to copy. Sorry, my bad. If you're not able to see, just let me know. I'll zoom it out generally. Okay. Take it till here. You note it. Online, any confusions? Done? Online? Done? Yes? Got clarity on it now? Okay, sir. Let's move ahead. If entity's historical financial information has never been audited or reviewed, sir, that means if your unadjusted financial information is not audited or reviewed, consider whether practitioners can obtain sufficient understanding of the entity, accounting and financial reporting practices. Because if it is audited, the previous auditor will be obtaining understanding of entity, environment, ICS, accounting control, everything will know. So I can rely on his report. But if it was never audited at all, then I need to take a consideration that, okay, will I be able to understand the entity, their accounting systems, their internal control? If yes, you accept. If not, don't accept it. Clear? If it is audited, it will be more easier. If it is not audited, then it will be a little difficult for me. Then, if the event or transaction includes acquisition and the acquiree's financial information is never audited, sir. Very good, sir. Acquiree means who? Selling company. So, in case of acquisition, buying company and selling company, consider whether practitioner can obtain understanding of the acquiree and its accounting and financial reporting process to perform the engagement. Because when you are acquiring, it's a significant event. Clear? It's a significant event. So, we have to understand acquiree's financial information. If it is audited, good. If it was not, again same understanding I have to take there. Clear? Previous point is with respect to my client. Next point is with respect to my client has purchased Amazon. So, Amazon point of view I need to see. Are you getting my point? Because if both are audited, good for me. If both are not audited, my work will be more. And it is different. No, it's not audit of financial statements. It is just what? PFFI. So I need to understand that whether if I am able to take the understanding, if the answer is yes, good. If the answer is no, bad. Okay. Then obtain agreement. Now this is exactly SA 210. Copy paste. Content is copy paste. Content is copy paste. Okay, let's see what they have to give. They have to give an agreement where they'll write adequately disclosing and describing the applicable criteria to the intended users if these are not publicly available. Compiling the pro forma financial information on the basis of applicable criteria, same, AFRF only for us. Providing the practitioners with what? Number one, access to all information, clear, whenever required, whatever explanations you give it to them. Additional information, whatever he requests, give it to him. Access to people within the entity, advisors from whom practitioner determines to obtain evidence. So basically for people within the entity, you will have to give access. Okay. Then, when needed for purpose of the engagement, access to appropriate individuals within the acquirees in a business combination. Acquiree means what now? Selling company. If he wants to go and talk to people in the selling company, that also arrangement management has to make. Okay. This is one extra point here. Extra point. Not there in SA 210. Not there in SA 210. Okay. Next, planning and performing the engagements. So we have decided that we are going to accept it. See, if acceptance is not there, this waste. Whatever we are studying now is waste because we are not accepting it. If you are accepting only, you will come to the second step. Second step is what? Planning and performing the engagement. Clear? Now, you shall evaluate whether first of all applicable criteria is suitable. What we did, same thing. If AFRF is acceptable, we go for it. If AFRF is not acceptable, we will not. So now here, is it suitable, sir? Acceptance is done. Is it suitable as required by the framework? Consider materiality, SA 320. But we don't apply SA 320. We take the concept of 320 and we can consider it here. Okay. Then understanding of a responsible party has compiled. Clear? Ensure or evaluate how they have prepared it. That understanding will help you better. Okay. Fourth, obtain evidence about appropriateness of the source from which unadjusted FI has been extracted. From where did you get this, sir? If it is audited, good for me. If it is not audited, who prepared this? From where? What are the things that you have done? Clear? All those things understanding I need to have. Clearly, if no audit or review on the source was done, perform procedures to be satisfied that the source is appropriate. Right there. Because audit gives more assurance. Because audit gives more assurance. Audit gives more assurance. Whether the responsible party has appropriately extracted the unadjusted FI from the source. Who is the source, sir? Check it. Clear? I told you, internal source, external source, so many things are there. Obtain evidence about appropriateness of pro forma adjustments. Whatever adjustments you have done, take evidence with respect to that. Evaluate the presentation of PPFI, how the presentation looks. Read any other information included in the prospectus containing PPFI to identify material inconsistency with PPFI. If there is inconsistency, right there. If inconsistency is found, then resolve before giving an opinion. Resolve before giving an opinion. Resolve before giving an opinion. WR, next. So first we accepted, then we planned and performed. In planning and performing, what? Applicable criteria suitable, materiality, right? Understanding of how they have compiled, right? Take the evidence with respect to that. If review or report audit is not done, then obviously I need to put more procedures to understand whether it is appropriate or not, right? Evidence about pro forma adjustment, then presentation of PPFI. Read the other information included in the prospectus, so that PPFI, sir, there is some other information, let's say some other statement or report they have given, but that amount is taken from PPFI. So if PPFI has changed, that also should be changed. Understood? Clear? Okay. WR, sir. Request WR from the responsible party that in compiling the PPFI, the responsible party has identified all appropriate adjustments necessary to illustrate the impact of the event or transaction at the date or for the period of illustration. Basically what? They need to tell, it is their responsibility, boss. Clear? They have identified all adjustments which is necessary. Meaning, nothing is omitted. Nothing is omitted. Okay. Then PPFI has been complied in all material respects as per the applicable criteria. Clear? So PPFI complies with applicable criteria. Okay. Opinion. Sir, if you feel everything is going well, concludes that PPFI has been complied by the party as per applicable criteria, give unmodified opinion. No problem. Good to go. Absolutely no problem. Now comes the part. Clear? Important. Modified opinion. When should we give modified opinion, sir? Sir, two scenarios. Okay. And then we will talk about EOM. Relevant law or regulation precludes publication of a prospectus that contains a modified opinion. Meaning what? Law does not allow you only for your prospectus to be launched if there is a modified opinion. I repeat, if there is modified opinion, law does not allow you only to publish it. Why? Sir, I don't want to take anything, sir. Any risk I don't want to take at all. Okay, sir. In those cases, what to do? And you decide that actually modification is appropriate. But see, law does not allow you. You means who? Management, to circulate the prospectus. And as an auditor, I am telling modification is necessary. In those cases, what to do? Go and discuss with the management. Tell them, sir, see, if I give modification, no, the law is not allowing you. See, what to do? Now, if management says, okay, sir, we'll make the changes, then give unmodified, no problem, because they made the changes. If they don't make the changes, don't give any disclaimer and all. I told you, which is better? Withdraw from the engagement or consider seeking legal advice. Clear? Consider seeking what? Legal. Talk to lawyers and see, sir, what can be done. Because if I give modification, it will be very difficult. Prospectus only won't be published. Therefore, your entire project is gone. Now, you tell me reality. If entire project is gone, will management take that risk? No. Will they make changes? Yes. If they don't, obviously we'll be withdrawing or seeking legal advice. Understood? Now, sir, relevant law may not preclude. So, one is law is not letting you publish. One is law letting you publish. If law is allowing you to publish such report, clear, where modification is there and you consider modification is appropriate, that time apply the requirements in the framework, meaning give whatever modifications you had to give. You can give qualified adverse or disclaimer, no issues. But in the above scenario, you can't give modification, because if you give modification, prospectus cannot be issued. I repeat, if law or regulation does not allow you to circulate prospectus if there is a modification, then what is the point of you giving modified opinion? It will not circulate, no. Therefore, tell the management, make the changes, otherwise I'll give modified opinion. And if I give modified opinion, you won't be able to circulate it. You see what it is. आप देख लो फिर. Clear? Number one. Number two. If management makes the changes, good for us, we'll give unmodified opinion. If management does not make the changes, withdraw and stop, go and take legal advice. Situation number two. If law says, give sir modified opinion, I'll allow you to give it to people, let people know how bad the company is now. Okay sir. That time I will not go and talk to management and all. I will give my modification. If I feel like giving advice, I'll give advice. Understood? Clear? Online life, silent warriors. Did you understand? Any doubts? Any doubts? Clear? Super. Next. Sir, what if EOM para? What does EOM means? Right. See, I know the full form. I want to know the meaning. EOM, I know it's emphasis of matter. Emphasis means what? Sir, whatever is there in the source only should be emphasized again. Anything outside the financial information or statement should not be. That's what they're telling. Whenever practitioner considers necessary to draw user's attention because it is fundamental, include EOM in the report. No problem. But, look at the note. Refer to only that information presented or disclosed in the PFFI and not to any other information. Meaning, sir, listen. You have gone to theaters, movie theaters. Yes. Online. Respond. Okay. Will you be able to take your own food there? And then let's talk about policy. What will they write there? One in one board. What is that? Outside food? Not allowed. Outside information? Not allowed. If you want, emphasize from the PFFI only, not from outside PFFI. That's outside food for your report. Not allowed. Clear? Only home food. What is home for us? PFFI. So information presented and disclosed in PFFI only should be considered. Right? Got it? Sir, I had this doubt. If law allows means there is anywhere, is there anywhere written modified opinion in this matter or not given, sir? I didn't understand the question. Let me try to understand it. If law allows, it means is there anywhere written modified opinion in this matter not given? Pooja, can you rephrase your question, ma? For this one, okay. This one, what's your question here specifically? Little confusion I have in that. If law allows, it means is there anywhere written modified opinion in this matter not given? Now, okay, correct me if I am wrong. Are you trying to ask me that, sir, if law allows to give modified opinion, is there anywhere they have given that modified matter in this opinion is not given? Such content you are asking, Are you asking about such content? Because you said about withdrawal. Withdrawal is here, ma. Withdrawal is here where law precludes from publication. Law doesn't allow me to publish. That's why I'm withdrawing it. If law allows me, I can give qualified adverse or disclaimer, no? So if law does not allow, only withdrawal will come, because I am not able to give modified opinion there. Because if I give modified opinion, circulation will not happen. So there is no point in giving modification there. There only withdrawal is possible. Whereas in this case, when law allows me, then yes. How can law restrict, sir? Possible. Possible. Law can restrict. But what if, the impact is huge? Public interest, right? So law can say, see, if there is any modification, don't issue the prospectus. Clear? Don't issue the prospectus. Sort that modification and then issue. Sort that modification and see, you tell me, if there is a modification, will you invest money? If an auditor says, or if a practitioner says, the PFFI is not consistent with the applied criteria, will you apply money? Will you put money? Then what is the entire logic of prospectus? My entire objective of prospectus or offer document is to get money. What is the point of me putting modified opinion in that and giving? Correct or not? So it will have a bigger impact. So for that, law can put restrictions there. Okay? Yes. Okay, sir. Now, preparing the report. Sir, what are the contents of the report? Okay, what are the contents of the report? Title, same title, addressee, introductory paragraph. You should identify PFFI, whether it is balance sheet, whether it is P&L, clear, cash flow, what it is, identify. Source from which unadjusted FI has been extracted, from where unadjusted FI has been extracted. Okay, one more doubt is there. If PFFI should not be from outside, then how can we refer acquirees FI, sir? No. I said information what you put in EOM. Rishabh, focus properly. Information what you put in EOM, that should be from PFFI. Right? Are you getting my point? Now in PFFI, obviously acquirees, asset and liabilities will already be there. No, if I already acquired, that I'll be mentioning in EOM. But there is something called as OM para also. SA 700 series. SA 706. EOM and OM. Anything outside the financial statements will come under OM. Anything from the financial statements will come under EOM. Are you getting my point? Because how will you emphasize that is not there in the financial information only? If certain things are outside financial information, how do I emphasize? For example, classic example I'll give you. Now here, do you remember I showed you Amazon report? In this notes, I had shown you Amazon report now. Now this Amazon report, you tell me, is it there in the material or outside the material? In the book that you have, right? The material that you have, the chapter, the my material that you have, is this report there in my material or outside my material? Is it there in a printout? Then that's the material I'm talking about. The printouts that you have, is it there in that? No, sir. It is outside that, no. Now, imagine if it is not there in my material. Imagine this notes is not there. This is my material. Where is it? Not there. How can I emphasize now? How can I highlight? I can't highlight, no. See, this I can highlight. Obtain the agreement, I highlighted. Why? It is there. Something which is not there, how can I emphasize? Right? That's why they're telling emphasize. If you have to do, it should be there in the material. That is PFFI for us. Got it? Got it? Rishabh. Okay, sir. Done, sir. All right, sir. Next. EOM para also done. Okay. Title, address, introductory para. Reference to the applicable criteria. What is the applicable criteria you have to refer? Okay. Yes, sir. Then description of the responsibilities, including statements that practitioner's responsibilities to express an opinion whether PPFI has been complied as per the criteria. Put a star mark for point number 5. Then, sir, you also have to give your responsibilities what? Practitioner is not responsible for updating or reissuing any reports or opinion on any historical financial information used in compiling, nor has he performed any audit and review. Clear? Yes, he was just helping in what? Compilation. Clear? The purpose of PPFI included in the prospectus is solely to illustrate the impact, and practitioner does not provide any assurance that actual outcome, sir, of the event or transaction at that would have been as presented. Clearly you tell this is futuristic, no? So I don't know whether exactly it will happen or not. Like I said, 1 lakh debentures, I don't know whether they will subscribe for 1 lakh or more than 1 lakh or less than 1 lakh. But here assumption is what? 1 lakh will be subscribed. Based on that assumption only we are doing this. Clear? Okay, sir. Statements that, here also put a star mark. Statements that reasonable assurance engagement to report on whether PFFI has been complied on the basis of applicable criteria involves performing procedures to assess whether criteria SAR provides a reasonable basis. So my procedure is just to see whether criteria provides reasonable basis or not. Clear? And to obtain evidence, sufficient appropriate evidence whether the related pro forma give proper effect and PPFI reflects proper application of those adjustments. So reflection and proper adjustments, appropriate effect. Then the procedures selected depend on the practitioner's judgment. Very simple. Audit procedures, who will take a call? CA. Similarly here, what procedures to put, who will take a call? Practitioners. Clear? Having regards to practitioner's understanding of nature of entity, event, transaction, etc. So basically you can simply write the procedures depends on the understanding of practitioner. Right there. Procedures depends on practitioner's understanding. Practitioner's understanding. Practitioner's understanding. Clear? Next. The engagement also involves evaluating overall presentation of the PPFI. So just underline overall presentation, whether properly presented or not. Whether properly presented or not. Unless otherwise required by law, using one of the following phrases is better. Sir, here we don't talk about fair presentation. Here only compliance. Only compliance framework. And compliance framework, what are the phrases? Whether the financial statements, generally, whether the financial statements comply with AFRF. Here, what is financial statements for us? PPFI. What is AFRF for us? Applicable criteria. So, whether PPFI has been complied as per or on the basis of applicable criteria, or PPFI has been properly complied on the basis stated. So, this is positive assurance. Unlike our prospective, there we give negative assurance. We did not find anything. Here we are telling we found everything that is matching. Clear? So we use compliance framework language and not fair presentation. You will never see PPFI is presented fairly. No. As per the criteria, it is presented. So this is compliance framework and not fair presentation. Be very, very careful. Then obviously your signature, date and place of signature should be there. Finally, we have documentation. Documentation has to be ensured by the practitioner as per whatever you have done in SAE 3420. You know why? Remember like this. Sir, management, clients, clear? And people. There are 3 people. You should not do 420 with them. Clear? There are 3 people who should not do 420 with them. So, sir, SAE 3420 talks about what? What is SAE 3420 talking about? Pro forma financial information. So, standard name is too huge, sir. Of course. Assurance engagement to report on compilation of pro forma financial information. Who should do the compilation? Management. We will be giving report on the compilation. Understood? We'll be giving what? Report on the Compilation. Compilation will be doing. Management will be doing. Clear? Understood? Yes. Right. This is your 3420. Hold on. Right, sir. Question number 3 and 4. Management of S Limited requests you to accept an engagement to report on compilation of pro forma financial information to be included in the prospectus in light of SAE 3420. What are the factors to be considered before agreeing to accept such engagement? Sir, what is the step I told you? What are the steps to solve a question? Step number 1, requirement. Read the requirement. What is the requirement here? Factors to be considered by you before agreeing to accept such engagement. Step number 2. Step number 2. Map the question to relevant essay. Which essay? Don't even have to map. Given. So step number 2 is easy. Step number 3. In that standard, map the exact concept. Now in this, I told you, acceptance is there, WR is there, reporting is there, planning is there. Which is this? Acceptance. First one. First element there. Correct? Fourth one. Relevant points you write. Very simple, 4 steps. Okay. Now come here. Acceptance point. Acceptance point. All these points you write. A, B, C, D, E, F, G. Clear? These points you write. So if you want to write here question number 3. Refer question 3. Question number 4. Pro forma financial information included in the prospectus as required by securities law has been compiled by the responsible party. You have been appointed to report on whether PFFI has been complied in material respects by the responsible party on the basis of applicable criteria. Before agreeing, you shall obtain the agreement of responsible party. State the responsibilities of responsible party. Very good. Step number 1. What is the requirement? State the responsibilities of the responsible party to be discussed in an agreement. So what is their responsibility? Number 1. Sir, second one. What is the standard? Here they have not told standard. No. You will be writing here SAE 3420. Understood? Clear? Okay, sir. Step number 3. In the standard, which concept? Which concept here now? There is one particular point, no? Responsibilities. There, no? Here. See here. Compilation of PFFI. Responsible party, gathering, classifying, etc. Yes or no? So this is your question number 4. Clear? Yes. But what if here they had written not responsible party but practitioner? Then practitioner's responsibility will come. Understood? Clear? So absolutely be clear with respect to, I am telling you again and again and again, 4 steps to solve a question. Step number 1, identify the requirement. Step number 2, identify the standard. Step number 3, map the exact concept. Step number 4, write relevant points. Clear? And obviously, please conclude properly in the case. Okay? Conclude whether, see, this is direct question. These 2 are direct question. Nothing is there here. It's not a case study question. That's what I'm telling you. Requirement, if you understand now, you'll know whether I have to study the question or not. Okay? Right, sir. SA 3402, I want you to solve this and come. Okay? Practice question for you. 3402, we have not done yet. So later on, we'll be doing it. Okay? This one you do. Question number 3, SAE 3400. 3402 do it later because we are yet to do that standard. SAE 3400 explains as prospective financial information can take form of forecast or projection or a combination. In this context, how do you differentiate forecast and projection? Provide an example. Sir, very easy. First page, there are 2 columns. Difference between forecast and projection. Under that respective examples are there. Copy paste here. Clear? 1 minute, Shama. I'll answer that question. Second question. KG Limited wants to provide prospective financial information to its investors with information about future expectations of the company. You are engaged by KG Limited to examine the projected financial information and give report thereon. What will you consider in assessing the presentation and disclosure and the underlying assumptions? Sir, presentation and disclosure hint I have given you. Straight away copy paste. Direct questions this is. 2 and 3 direct questions. These all are easy standards to score marks. And you know what? Students will consider this as something very big. Because standard number only is 4 digit now. And name is so long, sir. Who will understand what it is? So skip. 8th skip, 9th skip, 10th skip, 11th chapter skip. Correct? That's what people generally think about these standards. These standards are actually easy to score marks. Clear? Right, sir. But the 3420, very less chance of giving you high marks. But there is a chance of 3400 giving you marks. 3400, 3402. There is high chance. Clear? Yes? Right, sir. So this is whatever remaining is practice questions for you guys. Do it. Clear? Okay. Practice most of the questions. Right? So tomorrow we'll be meeting again and we'll be doing 3402. Clear? Thank you so much. Have a great day. 1 minute. I have a doubt to solve. Sir, point G in acceptance is also a responsible party's responsibility, right? Point G in acceptance. Let me just go. Yeah. This is their responsibility to give agreement. 100%. Yes. Obtain the agreement from responsible party that it acknowledges and understands. But in the exam, don't worry. They'll not ask you such a lengthy question. So many things you have to write for that. But again, you can only write these. I know what you're asking for, Shama. You can only write this. I'll highlight for you. Access to all information. Clear? When needed for the purpose of engagement. Clear? Then, now you think in case of acquisition, acquires information I want. Clear? Document, other material. These all are examples. Clear? These are examples. Information of acquiry in a business combination, records, documentation, other material, evaluating whether PFFI has been complied in all material respects as per applicable criteria. These things you need not write. Access to all information when needed for the purpose of engagement. This you write, such as records, documentation and other material. Clear? And mention about PFFI. Because when you say engagement, it is very similar to SA 210. These points are very similar to SA 210. So you mention about PFFI. Has been prepared as per applicable criteria. Second one, additional information that he may request for the engagement purpose. Now no problem. You need not mention PFFI here. Third, access to those within the entities. And fourth one, this one you have to write if they ask. This has to be there in your answer. Clear? Okay, sir. Done. Cool. See you tomorrow. Thank you so much and have a great day.